Are you still trading on news and emotion? Most traders lose to hype and headlines. This video shows how CTKS traders profit even in crashes. See how I made $8,147 in 10 hours during a sell-off. Learn the 3 things institutions use: knowledge, control, and systems. Discover why structure always beats the news. Get real trade examples, charts, and CTKS rules. Why retail buys green and sells red, and how to stop doing that. And also, CTKS traders ignore stories and focus on structure. Let's get into it and let's run the numbers. Hey everyone, I'm Ken from Crypto Trading KS and the CTKS Method. This was a post on social media in the past 24 hours. It got upwards of 733,000 views. This particular influencer said BlackRock is buying, Sailor is buying, countries are buying, banks are buying. Why the heck is Bitcoin falling? And what we've seen, that was just the start of the fall. If you're new, a very warm welcome and welcome back, CTKS family. Here I'm going to show you an illustration of what you can do. Pepe under these conditions was down around 35% in 11 days. Students who use the profiting method, and I'm going to teach you about it today in this video, can make money in a downtrend like this, going long at spot. And long at spot simply means that you're not borrowing anything. You're not using leverage. You're just using your own money. And long means you need for the price to go up in order to profit. A lot of people will say it's impossible to profit in a downtrend like that. By going long at spot, they would swap across to leverage and seek to go short. Unfortunately, so many traders and investors are dependent on the news. They love stories, just like when you were a kid and you read stories or you were given stories by your parents. Stories inside financial markets are very, very expensive. For example, this story, BlackRock is buying, Sailor is buying, it's all true. This person is absolutely correct in what they're saying, but this is a story. It goes a little bit like this. If everybody is buying, it cannot possibly go down. Of course it can go down. We need to have the application of Rule 173 be independent from the news. We've talked about this for many years on our community. Another particular rule which is very powerful is Rule 268. CTKS structure determines price waves. When you look at price, it's always going up and down. This is always caused by structure. And if you see big drops, they're panic drops. Let's make this real. For example, when this particular post was posted out on X, I was actually buying right down here. So when Bitcoin sold off, all the crypto market sold off, and you can see what Pepe did here. I put my order in here and I sold later here. Now, what did that yield? You can see my results here from the exchange. It netted nearly $900 in approximately 3 hours. Whilst other people were panicking, CTKS traders profit, and we profit going long at spot. Why? We don't guess. We know, we follow structure. Unfortunately, a lot of people misunderstand how the market works. The market, the stock market, the crypto market, the forex market, all markets are the same. They pull funds from hundreds of millions of different sources. All of those different sources have different reasons for getting in. Some are going long at spot, some are going short, some are swing trading, some are investing. It is an absolute myth that you take other people's money when you profit or they take your money when you make a loss. This is simply not the case. What is the case, and having been inside financial markets for nearly 4 decades, I can tell you, I can give you the shorthand version. The market pays you or collects from you based on your knowledge, emotional control, and systems. Now, what happens? Most of the time, people have very low levels of knowledge. They don't understand intercorrelation, interconnection, structure. There are so many things that they don't understand. They have little to no emotional control. And this makes a lot of sense. When people don't have high levels of knowledge, they don't know what's going on and they panic. It's even deeper and more insidious than that. A lot of people out there inside social media and on platforms like YouTube engage in a thing called RTP, or Retail Trade Perfection. Retail Trade Perfection is why you make losses. And the problem is, some of these people just exist to get clicks and advertising revenue cuts, so please be aware of the intention behind different people. The third reason, the market pays you if you have consistently profitable systems. One such system is in the profiting course. So when you put all three together, you have high levels of knowledge. You understand RTP, or Retail Trade Perfection, and you get emotional control, and you have definitive systems that you can apply that lower your risk. 90% of people lose money because they simply do the same thing over and over and over again, and they don't question it until they get burnt really badly. They buy on green and they sell on red. This is the ticket to consistent losses, so let's fix that. The market creates losses for those who don't know the rules, guess, hope, pray, believe in stories, and don't know structure. There's a lot of market rules to understand, but if I can turn nearly $1,000 in 3 hours off price action like this, going long at spot, imagine what we can do in an uptrend. The key to understand, if you're dependent on the price going either green or red, you're looking at the wrong things. If you're looking at the news or signal groups for your buy and sell recommendations, that is another thing. The market is going to punish you mercilessly. You must push your knowledge up. If you don't understand structure, you don't know where the ceilings are on price action. And if you don't know structural support, you don't know where the floors are. There's also a little bit more to this. Knowledge is really important, and you pay for it majorly inside financial markets. But there is one thing that is absolutely correct. This bleeds. This builds. And you can build in any market condition. Up, down, sideways, it's irrelevant. When people buy and sell based on emotion, what they're basically doing, they need to feel certain that price is going up. So pretend you couldn't see from the right-hand side and you just saw price going up and up and up. Retail would buy here because there would be sufficiently good news inside the market and people would say, this is going up, so many people are buying. But what happened here is a structural violation, a structural overshoot, and structure just hitting at support down here. So what's occurring is people are just frequently buying at the top of price action and selling at the bottom of price action. The key to understand is feelings almost always cause losses. You do not want to trade from your feelings, and trade means invest as well. The key understanding with CTKS structure, this is a rightwards looking indicator, which means these little dotted lines are the liquidity levels going forward in price, and they're marked up at the start of the month. They are scarily accurate. And what you saw before with that little trade that I did, you can turn big money just buying and selling around structure. Of course, in a sell-off it gets even better because you get onto the right side of the percentage, but you must be able and capable to read structure. Our edge as CTKS traders is that we know in advance where price will react to different levels. We don't wait, we know. And when it comes to knowledge, CTKS traders have tons of it. Craig C.J. Johnson said this little comment in a video from a couple of videos ago. Patience and structure, hedging probabilities down deeper towards substantial market structure where things are confirmed across multiple correlated charts and the chart that you put money into. Avoids the pitfalls of just anticipating a quick turnaround, which often leads to being caught on the wrong side of the trade. You must have discipline. Unfortunately, people don't have discipline, they have emotion. And when you know that patience is a key thing, that all charts are intercorrelated and interdependent, which is rule 447, and you analyze your CTKS structural dependencies, because these two rules just flow together, before you do any buy and sell, you can align things in with your favor. Having patience is really important, and the method will enhance your decision making, reduce risk, and improve your performance. Thank you, CJ. And if you would like to share a comment like CJ's, please do so. I'd be happy to share it in upcoming videos. Let's have a look at another area. Could this area be profitable? What happened in this area? Well, basically things just sold down. There is a ton of AI-generated content that's flowing into YouTube at the moment. You've got a lot of 16-year-olds who claim that they've got a lot of knowledge inside markets. It takes time to unwire your emotions. Now, looking at Pepe, I was doing trades and they were losing trades. A lot of people say, oh, how do I just manage a losing trade? If you're doing it correctly, your trades will be losing, but you're looking at structure and you know what you're doing. You've looked at intercorrelation, interconnection, so many different things, and the profiting methodology will give you insight into what to look at. So what we can see here is price was coming down, and I could have, these are real trades, and they're not $10 trades either, like you see on a lot of YouTube channels. It staggers me that people look at channels where people give trading advice and trades are never ever shown, or if they're shown, they're $10 trades. You want to be looking for people who put significant funds into the market, because you need to be able to manage a large account. Okay, so you can see here over 6 hours and 50 minutes, price came down and down and down and down and down. And then over a total span of about 10 hours, it arced up and those particular areas were sold off. Please let me know in the comments, have you ever been caught in a down wave and said, oh my God, I'm just sick of this, I'll sell, and you've sold literally right at the bottom? What you're looking at is real money, real results, small consistent profits, and real proof. These particular levels are different levels based on how I'm looking at the market. A $100 level, and you can see that's a 2% return. This is a $10,000 level with a 2.76% return. When you look at this one, this is a $20,000 level with around a 1.55% return. It doesn't look like much, but what does it add up to? When you add them all up, it's literally $8,200, and that was done over a 10-hour period. That's literally over $800 per hour profit. Not a bad job. And what was the market like? It was shocking. And what did we do? Did we go short? Did we borrow? Did we have to pay fees? No, we went long at spot. With knowledge, emotional control, and CTKS systems. Which brings out rule 271, you do not have to make big percentages to make big percentages. I think a lot of people would say $8,000 profit in 10 hours, not a bad day's work. Inside the profiting course, I explain what I look at and how I approach the market. Just always remember, if you're wishing and hoping, you're creating losses which are entirely avoidable. There's a very specific methodology that you can apply, and it's from the Profiting from CTKS Method Structure course, so if you'd like full explanations, you can pop across to there. The first thing that you need to do is to fill out the cheat sheet and assess it. The cheat sheet is available completely free from ctksmethod.org. This allows you to look across all markets. All markets are intercorrelated and interdependent, and what happens in one market impacts another market. Amateurs do not know this, but professionals do. Your goal is to become an institution of one, and then assess the CTKS structure. If you're not doing that, do not trade. there's a terrific video, and the link is in the description of this video to a price action masterclass. It will really help you out, and if you've seen it before, maybe watch it again. You'll pick up new things. Then the chart that you're putting money into, have you assessed that structure? If the answer is no, do not trade. There's a lot of reasons, just like CJ said, to not trade. Trading is a business. You must treat it as such. And then you'll need to read between charts. Inside the profiting course, you literally look in week 3 over my shoulder as I take you through profitable trades, one after another after another, in a very, very negative market going long at spot. And then you only want to buy and sell quality CTKS structure. It's a little bit like what CJ was saying. If the structure doesn't have confluence, don't get in, don't risk it. A lot of people have been asking about the profiting course, so I'll just very quickly go through it. It's literally a 4-week course that will undo all the damage that's been done to you financially across the years, especially in terms of how you think. Week 1 is about the foundations to consistent profitability. It's how to avoid influencer traps, emotional traps, and huge numbers of bad habits. And literally, this entire course is focused on trading inside a downtrend like we're experiencing right now. Week 2 is how to learn to read across all of the different charts of the cheat sheet and understand why you need to do so. This is an absolute game changer, as well as giving you insights on how to predict tops and bottoms of cheat sheet components. It is phenomenal. Absolutely critical skills if you wish to become an institution of one. And that's literally where you need to be. In week 3, you look over my shoulder into my thought processes and how I place trades in highly, highly negative markets. Not realistically too dissimilar to the market right now. Making money in a downtrending market by going long at spot is a superpower, and if you master that, you can master uptrends. They're just so easy to ride. Also, if you can master downtrend trading at spot, any type of consolidation trading is a breeze. We can make money in all 3 directions. There is so much information inside this masterclass. It is just absolutely incredible. It's like you sat down next to me and I'm just dumping 40 years of knowledge in a very easy to understand process. This is not fake AI generated rubbish. This is real trench trading. It's very important to understand, even with the right system, if you have the wrong mindset, you will create losses. You need to literally unlearn what you have learned. And so many people don't know that they're hoovering up so much rubbish that keeps them from profiting. If you would like to make profits like this, weeks 1 to 4 will teach you the structure that I applied. I took all the profiting theory and practice and just put it into these trades. We already know that we don't listen to market commentators. We just listen and observe structure. And the elite service members already understood that there were problems inside the market. I outlined them at the start of the month. Your goal is literally to become an institution of one and to not care what the market is doing. If the market is coming down, that's good. If the market is going up, that's good. If the market is going flat, that's good. The direction of the markets is only relevant to retail. I've just shown you a slice of trading to just get the awareness that you can make money in any market condition. And this money that's made doesn't come from the pockets of other people. You must get rid of that scarcity, low-level thinking. Everybody inside financial markets is doing the right thing for them every time they buy or sell. And just imagine what you can do in uptrending markets. Now, one thing to just be aware of, when you get downtrends inside markets, that will eventually create double-digit gain days. And if you're thinking from a retail trade perfection, you will basically sell the bottom. If you want the knowledge, the emotional control, and the systems that took me literally 40 years to create, just pop across to the Profiting course and you can use that special coupon to get 50% off. And remember, this is a lifelong skill. You learn to trade and you can trade in any market. This is not a trend following system. It's a structure following system. And a structure following system is a system that can work in an up market, a down market, and a flat market. It is truly unbelievable. The cost of learning to earn is one thing, but the cost of ignorance is all the money that you put into the markets. So another resource that can really help you out is a free YouTube video on Price Action Masterclass. You'll find the link in the description of this video.